During the first half of this year, increased lending was the main driver of Barclays Bank's financial performance, growing by 21% to 128 billion shillings.
For the first half this year, we've reported a 20% growth, which I think is the fastest growth we've seen in the last probably 7 or 8 years. We're supporting all sectors, whether it's corporate, retail, and SME.
But Barclays' provision for bad loans increased by 24% to 720 million shillings, perhaps owing to the poor performance of critical sectors of Kenya's economy, such as agriculture and tourism. The Barclays Bank MD, however, says the situation is under control.
You'll find that our lending book, the bad or non-performing loans over the last 5 years has declined by 11%. So we are comfortable that while we're growing our balance sheet, we're growing it in a quality way.
Despite the bank's increased profitability, Barclays shareholders will not receive an interim dividend. The bank's board of directors has opted to retain the half-year earnings to provide a buffer for increasing bad debt provisions by January next year, in line with the guidelines issued by the Central Bank of Kenya. This as the bank prepares to borrow 4 billion shillings from its London-based parent company to boost its capital base.
That will allow us to continue to grow our lending strongly in the future and bring us back in line, and as well as give a good return on equity to our shareholders.
Going forward, Barclays Bank plans to expand its mortgage and asset financing business as part of a 3-year strategy that's aimed at propelling it to among the top 3 commercial banks by revenue in Kenya. Bella Genga, The Big Question.